Hello everyone, this is Juan Sarmiento and today is Friday, September the 1st. Let's take a look at what is happening with the SPY. You can see here my different support lines and resistance lines. As I predicted, the market came to the Ichimoku cloud, it has bounced from it. Now, I said if it moves really quickly, it is likely to break through the previous high, which is back here, and it goes back months and months, over a year. So let's put a yearly chart or a weekly chart to see our previous high back in the January of 2022. So it's been over a year, obviously, a year and a half. And here we have our channel and my potential target if everything goes all right. So consider that the market could go to the top of the trending channel. Okay, let's put a daily chart back again, and so we see that it's a little bit less dramatic than I would have expected, but the good thing is that the market has gone above the Ichimoku cloud. The leading cloud, as you can see, this little portion of the Ichimoku cloud is red, which may be indicating a potential reversal to the downside. It may be that if the market goes here to the previous high, may form a double top and then break down. So I have my target here. That's where I hope the market will go. I think it might go, but this rally here is less than enthusiastic, I would say. So we have to be cautious. But in this particular scenario with the SPY, we are looking to invest for the long term. And you can see if I go to the monitor tab, look at my SPY. Here in the monitor tab, you can see that I have total profits $3,332 or 6.75%. Okay, and we keep on building our account here. It's not very impressive, to be sure, but when you consider that the market went down for most of this 2-year period and then now it's slowly creeping up. If you take a look at the weekly chart, I think we're doing pretty well right here. If it breaks out, well, then I think the market would accelerate to the upside and then we would see great profits. If not, if the market goes down again, we will accumulate more shares. Okay, eventually the market will go up. I don't know if it will take 2 years or 10 years or 15 years, but this approach to trading or investing is for the long term. Okay, now having said that, let's go to the monitor tab. We click on our position and say adjust cash. Right click, and then we can add $500 as we've been doing for the last 110 weeks, if you call it. We've been doing this weekly adjust. You remember just to say that this is a paper trading account and it's done as an exercise to see what happens if we trade this way. I think we have it very clear now that we are building a position. Now it's $52,881. Okay, just by adding $500 every week. So I'm going to add $500 here, and now we can invest one more time. And what we do is click here and say, well, let's just go to the Analyze tab here and click Add Simulated Trades and just click on the Ask. That's the easiest way. And I create 100 shares. Well, I'm going to buy just one. That's what I've been doing. And my new price is $450.37. My average price is $422. That's about to go up. So let's set that off. And you can see I'm paying $450.38 for the 1 share. And that will give me a total of $118 with an average, the average price will increase just a bit. Okay, so you can see the wisdom on buying when the stock was here at $353, because we bought plenty up here and now we're having just about the same price. And I bought at $450.38. So let's go to the Analyze tab, and this is now my average price is $422.26. Because we have more than 100 shares, you can always sell covered calls. For the covered call strategy, please look at my channel, because I have a whole series on the covered call, and that will be useful. We could do a covered call on this every month, but that of course will place a limit on my upside potential. So only if I believe that the market will go down, or if I use it as a way to collect money every month. What I would suggest is that you start buying or selling covered calls once you reach retirement, and then use to collect cash out of it. So let's say every 35 days I come over here and look for the option with the least intrinsic and the most extrinsic value. Click on the bid, and that creates that covered call. For that covers 100 shares. So we still have 18. And this is what the risk graph will look like. You still have unlimited gain to the upside, but it's not nearly as much as with the 818 shares alone. Okay, so keep that in mind if you want to do the covered call. But the strategy of selling covered calls is discussed in my other series, the covered call. Okay, thank you very much for joining me, and I see you next time. Bye bye.